Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Well, hello, good afternoon. Welcome to a new edition of Lunch with the Shark. I am your host, Vidal, the Shark CFO, Espinosa, and I am really happy to be here with you. It's a nice day. I think spring is, it's really approaching really fast. And my view right now of the ocean, it's superb. There's actually, I can see a couple of dolphins just going in and out. Obviously, they're not jumping, but they're just going in and out. It is amazing. I hope they're dolphins. I hope they're not sharks. Well, if they are, hey, sharks, but I don't think so. It's really great. I haven't seen dolphins be like that active. There's several of them. It's really nice. They're just jumping and going in and out. It's really amazing how the universe works. Today, we actually celebrate, and this is for Captain Crunch and all dog lovers out there. Today, we celebrate International Dog Biscuit Appreciation Day. So everyone that has a dog, give them a biscuit in appreciation for today's day, and actually for appreciation to them, because they actually make our lives very interesting, or more interesting, and they are actually part of our life. Isn't that right, Captain Crunch? He is a very spoiled dog, and we love him a lot, and he loves us a lot. That's obvious. So today's National Dog Biscuit Day, and we also celebrate National Banana Bread Day and World Spay Day. I wonder why they celebrate both days. This day, the National Biscuit Day and World Spay Day. Do you get a biscuit after you get spayed? That's odd, isn't it? So, how's your week been? I know it's barely second day of the week, but what a month has it been? I just got an interview for a news station in regards to preparing for your tax return. And what we are seeing is that this year, refunds are less than last year. Also, we're noticing that because a lot of people received unemployment, they're not getting their earned income credit. So no big refunds this year, and or paying a lot because you did not get any taxes withheld from your unemployment. Unemployment, as we all know, or you might not know, and now you know, it's taxable income. Unfortunately, even though it's an insurance, that insurance in particular, it's taxable. Yes. If you haven't done so, please reach out to us, Invictus-Advisors/taxes, and get your appointments on the books, because this year we are not getting in-face or in-person appointments. It's only virtual. We're doing them either by phone or by Zoom for everybody, no exceptions. We are not receiving clients in our offices. Everything's going to be done virtual. So get that appointment on the books, because we only have very few and limited spaces available. Invictus-Advisors.com/taxes. And I am not going to promise you thousands and thousands and thousands of dollars in tax savings. because you might not qualify. I can give you a book on tax savings that you clearly understand, not the tax code, because that book would be the basic book that you would have to read for all those thousands and thousands and thousands and thousands of tax savings that do not apply, most of them, to you. Nevertheless, I can give you a book with 62, 69, 60, whatever, plus tax strategies that you might be able to implement. And with that said, I can save you hundreds of thousands of dollars. How can you do that if I only earn $10,000? Well, I don't think if you earn 10, 20, 30, 40, $50,000, you're going to be able to save tens of thousands of dollars. Beware out there of those tricky and con artist advertisers that are promising you or misleading you or misguiding you with those savings. At the time of your tax return, they're not going to be able to do a lot of things for you, as they say, because you might not qualify. Beware, read the fine print. Read the fine print before you do something that you can regret down the line. Okay, so get your appointment on the books, Invictus-Advisors/taxes, and I will be more than happy to go over your tax returns and or your own particular case. So just do it. Okay? So let's dive right into our topic, because yesterday's or this week's topic, it's really important for every single type of business, services or products, whatever. It's like, how the hell do I price my product or services? You are not just going to be like, holy shit, you know what? I think this phone cost me $20, so I'm going to sell it with a 30% markup. That's it. So I'm going to sell it for $130 or $130. That's it. And guess what? Maybe your fixed costs are like $100 plus, and you're just selling one, and you're just like, oh shit, I just made that $30. No, you lost $70. Maybe you don't know, right? Maybe you don't know your numbers, right? That's right. Fuck your numbers. You're not supposed to know them. Fuck your numbers. You just need to know your revenue. But revenue comes from how I price my products or services, right? It's no secret that small business plays a vital role on the U.S. economy. However, revenue for small businesses can be very scary, because revenue for us small businesses entitles us to sell. And we hate selling. We hate selling ourselves. We hate selling our products or services. So what is a pricing strategy, and why is it important? In short, a pricing strategy refers to all of the various methods that small businesses use when setting prices for their goods or services. It's an all-encompassing term that can account for things like market conditions, actions that competitors take, account segment, trade margin, input cost, consumers' ability to pay, production and distribution cost, variable cost. Holy shit, how do I eat this? What do I do with this? Well, pricing strategies are useful for numerous reasons. Through those reasons can vary from company to company, though. Yes, through company and company. Do not try to use the same pricing strategy that your neighbor, that it's a car wash and you're a doctor. Yes, I am going to price and utilize their pricing strategy. Dude, it's per industry. Your business is different than your other doctor's friend's business. Okay, so choose the right price for a product will allow you to maximize profit margins if that's what you want to do. Contrary to popular belief, pricing strategies aren't always about profit margin. And I'll give you one clear example. If you ever been to a Costco store, okay, their pricing strategy for their rotisserie chicken, it's actually to lose money. They lose money on each chicken they sell. So why do they sell it? Because that chicken, it's all the way to the back of each and every single warehouse, and they make you walk through the aisles where they have the highest profit margin items in the warehouse. So they really don't care if they lose money on those rotisserie chickens because they made you pull a couple of things with a high profit margin for them, and they make up the difference through there. That's a strategy. They reel you in for one item that they don't care losing money. Does that make sense? Okay, so here are 12 different pricing strategies for your small business to consider. I'm not saying utilize all of them, okay? I'm not saying this is for you. You have to make the decision in which ones utilize and tailor them to your own business. Do not do it because others are doing it. Oh, another accountants have a menu for the items, the tax forms that they utilize, and you are really expensive. Yeah, we are really expensive. Compared to what? Yeah, when the IRS comes knocking at your door, and you went with the cheaper option, are they going to be there? Are they going to help you defend that tax return? Are they preparing you for the numbers, or are they just inputting numbers that you tell them? And hey, I want a $10,000 refund. Done. Here, your which is my command. You owe me $100. Okay, here, it's $100 for $10,000. Wow, amazing. Okay, so beware. Okay, beware. Number one, pricing for market penetration. As a small business owner, you're likely looking for ways to enter the market so that your product becomes more well-known. Penetration pricing aims to attract buyers by offering lower prices and on goods and services than your competitors. Okay? For instance, imagine a competitor selling a product for $100. You decide to sell the product for $97. Even if it means you're going to take a loss on the sale. Penetration pricing strategies draws attention away from other businesses and can help you increase brand awareness and loyalty. This is not for everybody, okay? This is not for everybody. Don't give a tremendous discount because it's going to be difficult for you to adjust later on. Okay, this is not for everybody. Penetration market strategy must be very, very well utilized and strategized. Number two, economy pricing. This pricing strategy is a no-frills approach that involves minimizing marketing and production expenses as much as possible. Used by a wide range of businesses, including generic food supplies and discount retailers, economy pricing aims to attract the most price-conscious consumers. Because of the lower cost of expenses, companies can set a lower sales price and still turn a slight profit. Economy pricing, it's not for instance, the makeup industry or the cologne perfume industry. Their marketing expenses are tremendous because they're trying to appeal and they're building their brand. But if you buy a generic off-brand makeup product or perfume cologne, then the prices are less expensive, even though they might smell or do the same thing, right? But also the quality is different. This is not for, again, this is not for everybody, okay? Do not try economy pricing if you're an attorney or an accountant. You are going to look and appear based on inexperience and cheap. Number 3, pricing at a premium. With premium pricing, because said costs higher because they have a unique product or brand that no one can compete with. You should consider using this strategy if you have a considerable competitive advantage and know that you can charge a higher price without being undercut by a product or similar quality. We spoke about this yesterday, and Louis can do that, right? They can do that because they don't care. They don't care. They're going to have you there because they have brand recognition, right? So they can charge a premium. It's a well-known brand. Gucci can do the same. Hermes can do the same. Herrera can same. All those brand names out there, they can do that. Oh, you can get a cheaper one similar to it in another store. Yes, you can, but they can charge a premium price. If you are a top-notch attorney, a top-notch accounting firm, you can charge a premium because you're well-known and respected in your area of expertise, and you earn to charge that premium. Tony Robbins can charge $100, $200, $300,000 for coaching, $3 million for 1 hour of coaching with him, right? He earned that premium. Number 4, price skimming. Designed to help businesses maximize sales on new products and services. Price skimming involves setting rates high during the initial phase of product. The company then lowers price gradually as competitors' goods appear on the market. For instance, your cell phones. The moment they come out with the whatever phone you have, Samsung 220, I don't know what number they are in, right? So as soon as they roll it out, your price, it's going to be like $20,000. Now they're more expensive than a computer, right? But a month later, they're going to be 19,000 and so forth. That's price skimming because they've built up so much momentum and hype that, holy shit, I won the brand new 229 model of Samsung or Apple or whatever the shit it is, right? That's price skimming. Number 5, psychological pricing. Psychological pricing refers to a technique that marketers use to encourage customers to respond based on emotional impulse rather than logical ones. For example, setting the price for a watch at $199 is proven to attract more consumers than setting it at $200, even though the actual difference here it's very, very small. Why? Because you're not paying $200. Shit, I'm paying less than $200. It's a bargain. It's $199. Yeah, it's not $200. It's $199. So psychological pricing, it's amazing for a lot of industries. Number 6, bundle pricing. With bundle pricing, small businesses set multiple products for a lower rate than consumers will face if they purchase each item individually. A useful example for this occurs at your local fast food restaurant, where it's cheaper to buy a meal than it is to buy an item individually. Not all the times, okay? There's a lot of savvy consumers out there that have done their math and they mix and match and combine for a lower price than a bundle pricing. Nevertheless, the perception of a meal priced correctly will make you think that you are saving, right? Now, if you're selling it, you really don't care. Your objective is to sell that product, right? You need to act as the seller and as the buyer. Use both psychologies, okay? So price bundling works really, really good. You know what? I have these 3 products. This is the bundle for this one, for this one, and for this one. That's it. Number 7, geographical pricing. If you expand your business across states or international lines, you'll need to consider geographical pricing. Geographical pricing involves setting a price point based on the location where it's sold. Factors for the change in pricing include things like taxes, tariffs, import duties, shipping costs, and location-specific rent. Dude, an accountant does not charge the same in North Carolina than in California. North Carolina way of living, it's much cheaper and inexpensive than how much we pay in California. Trust me, California is really expensive. Now, if you go to New York, a coffee, it's $10. North Carolina, $2. California, $5. So geographical pricing, it's all based on the areas. Expect, as consumers, to pay more at certain areas, to pay less in other areas, okay? Price accordingly for your product as well. Number 8, promotional pricing. Promotional pricing is another competitive pricing strategy. It involves offering discounts on a particular product. For instance, you can provide your customers with a voucher or coupon that entitles them to a certain percentage off the good of services. You can also entertain a buy one, get one campaign, tacking on an additional product as an add-on. Most of the times, you generate more sales revenue with this promotional pricing, buy one, get one out, right? Ultimately, you're increasing your revenue with a smaller percentage in discounts. Price. Play with this promotion. Number 9, value pricing. If you notice that sales are declining because of external factors, you may want to consider a value pricing strategy. Value pricing occurs when external factors like a sharp increase in competition or a recession forces the small business to provide value to its customers to maintain sales. This pricing strategy works because customers feel as though they are receiving an excellent value for the goods or services. The approach recognizes that customers don't care how much a product costs a company to make, so long as the consumer feels they're getting an excellent value by purchasing it. Value pricing, it's very important in our current economy. For instance, you know what? We provide consulting services utilizing accounting and tax strategies, okay? Not all of our clients can afford our services at a CFO level. But during this time, we can actually support them value pricing free of charge for those services to help them mitigate the impacts of the current economy. That's actually value pricing. Number 10, captive pricing. If you have a product that customers will continue, renew, or update, you'll want to consider a captive pricing strategy. And the perfect example of a captive pricing strategy is seen with a company like Dollar Shave Club. Dollar Shave Club customers make a one-time purchase of a razor. Then every month, they purchase new razor blades to replace the existing ones, and it's a cycle. That is captive pricing, okay? So pretty good, pretty good. Dynamic pricing. Dynamic pricing is when you charge pricing, different pricing depending on who is buying your product or services or when they buying it. It's a flexible pricing strategy that takes many factors into account, particular charges in supply and demand. A clear example of dynamic pricing was Disneyland ticket prices. During the weekday, if it wasn't a holiday, they would have a lower pricing to go into each theme park. If it was a weekend, or if it was a weekend with a holiday prior or after, the pricing will be higher. They have dynamic pricing. So they utilize the supply and demand strategy. If there's a lot of demand, prices increase. If there wasn't that much demand, prices were least expensive. Dynamic pricing is a great way to generate revenue on off days. For instance, restaurants use it a lot. You know what? Mondays, Tuesdays, or Wednesday are slow nights for restaurants. So they have half off bottled wines, or buy one, get one free, or whatever it is. Or you know what? If you buy this, you'll get this. That's a dynamic pricing strategy. Number 12, competitive pricing. Competitive pricing is when your price either match or beat those of similar products that are sold by competitors. Often this simple means selling your product or services at a better price, but you could choose to offer better payment terms instead. If you're not a commodity, do not use competitive pricing. If you are not a commodity, do not offer competitive pricing. Okay? If you are a restaurant, if you're selling a product, okay, do implement this strategy. Now, competitive pricing doesn't mean that you're going to have to lower your price. Better payment terms. You know what? Even though you're not asking me, I can offer you 18 months interest free. Holy shit, 18 months interest free, that's free money. Literally, that's free money if you know how to utilize credit, right? So look into this. As we navigate the strategies, what is the most effective pricing strategy for me? You're gonna ask. The most important factors influencing your pricing strategy is rooted in your financial data. Oh, shocker? Hells no. First and foremost, you need to know what it costs to produce your product or provide your service. Fuck your numbers, right? You need to continue monitoring those costs so you can quickly react to changes and maintain long-term profitability. Dude, know your revenue. Let us worry about all the other numbers. You are not in the business of knowing your numbers. No. You're not, please, for the love of God. You're not in that business. Okay? So at least know your revenue number, okay? How much you're bringing in, and let us worry about that. Look into those strategies on pricing, okay? Don't price like, you know what, I feel like pricing this much today. Don't utilize dynamic pricing like that. No, okay? Have a strategy behind it. So we're gonna end up today's show with a quote from Bill Bradley, American politician and former professional basketball player. And he said, leadership, it's unlocking people's potential to become better. Leadership is unlocking people's potential to become better. What do coaches do to their athletes? They push them to become better. And they actually freaking don't care if they hurt their feelings in the way of doing so. Dude, I'm gonna break you to build you back together, put you back together a better individual or a better athlete. Do you care? Do you think I care if you suffer? Yes. But you're gonna be a better person. It's been great seeing you today. Bon appetit. Ciao.
Thank you for listening to Lunch with a Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com and don't forget to subscribe.